Hi, welcome back to this week of RHO Market Chat. We are one day late because yesterday was a holiday. So let me just quickly recap what we did last week. So last week we said that there's renewed escalating risk of US-China tension, and the major markets around the world are trading within a consolidated range. And it is still trading within a consolidated range. And so this is the chart of Dow Jones, or my trade plan of Dow Jones, really, just being kept by the resistance at 21,678. All right. And if we have a breakout of Dow, it could hit 25,500, and that will be a very strong resistance level. So I believe that if it hits there, we could see a strong pullback towards 24,678 again. All right, let me put on my specs. Okay, yeah. So if it breaks out of this range, it would hit 24,68. 2024-678 again. So watch this level. So this very significant level on the Dow Jones. All right, and the Wall Street index seems stronger than the Asia index. And last week, Hang Seng was hit by news of China introducing a new legislation to have a tighter control over Hong Kong. So the index dropped close to 1,700 points, and last 2 days it has rebounded. So Hang Seng still trading within the range. These are the significant range, and these are my trade plans. So last week Hang Seng went to hit my support at 22,512, hits right there and rebounded back. Still within the consolidation zone. Don't chase the breakouts. Like I said in the last week, don't chase the breakouts. Buy the support and sell the resistance. All right, STI also the same. Buy the support, sell resistance, and still trading within a consolidated zone. This is my trade plan. Watch those levels, trade within those levels, all right? So last week we said that the FANGs continue to diverge in terms of relative index. They are the stronger ones, and they continue to lead in the market leadership, all right? So it continue to outperform all the other markets, and that is evidence in how the NASDAQ is close to taking the all-time high. All right, and so this is one of those factors that is giving the market such a bullish outlook now. Corona cases in China and US, the new cases has been decreasing, and now we are in the phase of reopening of economy all over the world, from China to Europe to US. And that is why the market has been so positive now, ignoring all the other bad news. So last week, we also talked about the US trying to control the Chinese tax, and primarily Huawei. And consequently, a couple of companies like SMIC, Hikvision, TSMC, AC Tech could be affected. All right, so what we're going to talk about this week. So this week, I'm going to talk about US tightening the screws on the China tech stocks, and the coming revamp of the Hang Seng Index. So Hang Seng Index hasn't been revamped for the last 50 years. And this time around, somewhere in August, all right, they're going to revamp the index. And that is why we have, as investors and traders, we have to find or take advantage of this up and coming revamp to profit from it, all right? So, and also there's a new bill passed by US to delist Chinese companies linked to Chinese government. All right, so what we saw, all right, just last week is the rejuvenation of Donald Trump prospect for the US election. You could see that his ratings sort of improve a little bit, and that could strengthen his hands, all right, in pursuing the Chinese bashing team in terms of strangling or imposing more restrictions and bans on Chinese companies, and also threatening trade tariffs. So this is what the US did last week. All right, they announced, all right, that the Chinese companies, some of the Chinese risked delisting under the new bills. And true enough, last week, the US appeared to be aggressively accelerating the tech export control over China, and this is the third action in the last 1 month. All right, and the U.S. Commerce Department has announced, after the Huawei ban, all right, they have announced another 33 addition to the entity list restricting U.S. Chinese tech to U.S. technology and software, and this will raise the downside risk to the big techs, all right, earnings and valuation down the road. Okay, so we talk about Hang Seng revamp, major revamp down the road somewhere in August. So between now and August, all right, look into these stocks. This could be the beneficiary, all right. So these are the stocks that could be added to the Chinese index: Meituan, Alibaba, Xiaomi, JD.com, NetEase, Baidu. All right, so these are the stocks that could be added, and these are the stocks that is worth watching from now to August. It could have some good upside. All right, and these are the companies that could be heading home from US. So they are also potential delisting from US to China. All right, so the main beneficiary of this whole revamp of the Hang Seng Index, I believe, is the Hong Kong Exchange and Clearing Limited. All right, and so I believe that the Hong Kong Stock Exchange remains the best play, all right, for this team. So let's look at the price action of Hong Kong Stock Exchange. The chart looks really good for a breakout. All right, so it has been testing the 282 level. All right, so yesterday it closed at 272. It has been testing the 282 mark, and this time round, when it tests the 282 mark, all right, I believe it's going to break out. All right, so next target 296 and 306. So this is a long-term play, or I would say this is a 2.5 months play to August. All right, so this is the main beneficiary, and for long-term investors who want to take a view, all right, this obviously is in the radar and in the horizon of the big fund managers. All right, Hong Kong Stock Exchange. So keep an eye on it. So this is my target price. All right, last close 272. Buy on weakness. If you can get it at 256 or 261, that could be a good level to enter. So watch this stock. All right. So these are the main beneficiary. And last week, this was the headlines. All right, so a lot of people are really worried about what the US could do to China, or what they have threatened to do to China, and that really is to impose sanction or also remove Hong Kong's special trade status in view of the Hong Kong security legislation proposed by China. All right, but what I think really is this week's proposal on the new national security legislation for Hong Kong, which has caused investor concern over China's sanction. All right, but I think, in fact, all right, nothing really is going to happen. It is a knee-jerk effect, and the reason is because the value of export, right, from the Chinese mainland to the US to Hong Kong account only for 15% of the total value of Hong Kong export. All right. So really, Hong Kong doesn't do a lot of business with US as it used to be. So Hong Kong, right, is the largest source of trade surplus with US, and any sanction against Hong Kong will have a greater impact, I think, on US than on Hong Kong. And that is the reason why I believe that the US business will lobby against such a move, all right, to remove Hong Kong from its special trade status. So I don't really think it's a problem, and I think that the Hang Seng weakness is a buying opportunity. All right, so this is all for this week of RHO Market Chat. I hope you enjoy it. So see you next week, and keep strong, keep safe, keep healthy, and stay at home. Bye-bye.